Hey, listen, we got us a banger coming in today. Listen, y'all, I don't know if anybody's got the news, but like I said, we got some stuff to cover with our AMC thing out the gate. Everybody should know AMC is currently sitting at 28%, 28.80%, almost 29% short interest. We're going up to 30% short interest, guys. Something's bustling and bubbling. Like I said, we all still waiting on this verdict from this judge. But like I said to one of our family members in the comments, who was asking, if the no vote happens and they don't give the reverse split, what could happen? Well, the fact that we're on the threshold list, the fact that the cost of borrow was rising, the fact that the short interest is finally actually moving up to something applicable. I mean, it's still far from what the actual short interest is, but the fact that we're seeing actual numbers, guys, something zesty's going on in the background. But like I said, we're going to go to cover. Like I said, we got some interesting things to put down, some money plays to come in. Let's get down to it. Without further ado, come on now. Y'all know what time it is. Cue that wind effect. Bring it in. Bring it in. Bring it in. It's a round table event. It's the money making event. My portfolio jumping. I don't know about yours. Come on, bring it in. 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 Oh, all right, folks. Let's get down to it. Obviously, as everybody knows, we spoke about this in yesterday's video. CPI, even I was shocked. But I thought that we were going to get blasted. CPI came even below a year over year, below the 3.1 at a 3.0. Guys, that is immaculate. We got thought on yacht numbers. And now this is what I'm trying to tell y'all, where it's called dollar cost average. You cannot time the market because everything in the market has, even the hedge funds, institutional investors are confused about what's doing. They're under leveraged, right? Hoping for that dip to buy in because, like I keep saying, they're over leveraged in bonds and under leveraged in stocks. Guys, this market is about to make manure, especially in that tech sector. You might want to put a little tech in your tech so you can get a little tech, all right? But like I said, if you don't, I'll have a second yacht for you over here. These are going to be the leftovers of the thoughts, all right? The main thoughts are going to be on the boat with me while I'm swinging loose in that G-string. But without further ado, let's get down to it.
Our floor show, and with some of his ETF picks is ettaFi Vice Chairman Tom Lydon. I want to get to your picks, Tom, but I first want to start with your reation to the data that we got this morning. The Fed
been smoking that gas.
Kind of back off the idea that we're going to get another hike this month in July, and even maybe not get two hikes for the month, for the year of 2023. What did you make of the reaction from the markets today after CPI?
Well, obviously very positive, Cheryl. The Fed's done a great job hitting all the right notes on its path towards getting inflation under control. Most financial advisors that we work with are looking to a year from now. And a year from now, they say rates are going to be lower than they will today. So that means even though you've got a lot of money on the sidelines and money market funds getting 5%, if rates are going to be lower, that yield's not going to be there a year from now. So that means they're going longer duration. They're buying more corporate bonds. They're buying more high yield bonds with the idea, with rates coming down, not only they're going to lock in higher yields, they can make some appreciation.
Guys, with this information that came in today, this is literally about to y'all are not hearing what I'm saying. Dollar cost average, guys. Like I said, if you don't have one, go check out the scripts for the Weibo. Get the Weibo, get us both some free stocks. If not, Charles Schwab. But either way it goes, if you can't buy the full share, you need to be dollar cost averaging in. The thing that we've been screaming as far as hedge funds being on the sidelines and being over invested in bonds, this information that came in is showing, wait a minute, there might be a control over this inflation, which is literally going to bring down the yields or the return on yields. They're about to be forced to come into equities. This is about to snatch off. I'm trying to tell you, like I said, I'm going to show you, I'm going to give you proof at the end of this video.
Along the way, which is the first time that's happened in a while.
The sticky part of the report was shelter. That continues to be an issue. That was 70% of the read that we got this morning. You also have a strong job market. This seems to me to take off more and more the idea that we're going to get a recession in the second half of the year. What do you say?
Well, as we survey advisors, most feel that there's going to be a soft landing. And with that, we will have lower interest rates as we go into next year. It would be perfect if they orchestrated it so we didn't get a recession, but it's going to be very, very close. The good news for the stock market is, as you can see today, It likes it. And it's not just the Magnificent Seven. When you see a day like today where the Russell 2000 outperforms the S&P,
look at them tech. They ain't showing them names, them real names. It's crazy how they just don't.
Outside of the
It's crazy
S&P,
they don't show the
there's
real
some
bangers
really
that's
good
moving.
bargains out there.
It's interesting because I was
Somebody
looking
hit
at
an
some of the
all-time
things that
high
you've been
today.
asking financial advisors, the concerns from the manager
It's funny how
side
this
of
don't
the
make it up
equation here.
It's crazy.
40% say that recession is a major concern.
I'm fully convinced, guys, that these people are not going to show. They never show on media the bangers that's at the big boys that are moving. I'm going to show you the name. The name should be up here.
24% say market valuation.
Maybe they'll come through. Let's
is a
see if they do.
concern.
But this is absurd. The fact
that has
they
been a
ain't
big topic of discussion. I go back to the AI story that Charles Payne was kind of touching on at the end
This
of
is
his
where you know
show.
you're in the right
because
stock.
AI is really what powered the first half of the year stocks-wise and ETF-wise.
Yeah, so who's the main big dog in AI?
There. But there is concern that AI is going to maybe cool off in the second half of the year. What do you say?
No, you're right. So, AI is a big deal. However, a lot of people are claiming that they utilize AI. AI is something like anything that we're going to have to embrace going forward.
There she blows.
Especially in the financial services industry,
blows.
there are a lot of pluses.
There they blow.
Utilize AI. There are actually
Okay,
AI
they had to say, I'm
ETFs
about to say, y'all
popping
playing
up all
around.
over the place. As Charles talked about, we have robotics ETFs. Unfortunately, no avocado ETFs yet, but hopefully they'll be coming.
Yeah, well, the avocado did certainly look good. Now I'm craving guacamole. But before you run, you do have a couple of ETF recommendations here. I want to talk to you about Cambria Shareholder Yield ETF, SYLD. That's one of your picks. And then the Pacer US Small Cap Cash Cows. That's interesting because there's been a lot of talk about small caps, and that has been the ignored part of the market so far this year.
Cheryl, you're absolutely right. So first, shareholder yield, as you're actually kicking off yield and cash flow, that's really important. Cambria does a great job not only picking the companies that do that, but have very fair valuations that are half of that, almost 50% off.
And again, guys, just so y'all can understand how good this is, market was pricing in two hikes, which, like I said, I'm the type of person where I'm just going to follow the Fed. I'm not going to sit up here and be trying to predict, the market already prices that stuff in, but the market priced in, which is why y'all saw that little sell-off, that little minute thing where you went down 3%, where they were pricing in those hikes. Well, this information came back blowing past expectations. So like I said, you're about to have that level where I say Tesla to 300.
Off of the S&P.
Right.
And
you
as
heard
far
it
as small
first.
cap,
When it's there, don't be sitting up there.
Small cap's been unloved for a decade.
I've been
over
screaming
the long
it
term, they've
since
outperformed
100,
large
since
cap.
150,
this
since
cash
200,
cow
since
ETF,
230.
ticker symbol CAF, CALF.
Since
Something to
260.
take a look at as you want to expand outside large cap growth, especially if we continue to see a rebound in the value-related stocks.
Well, and you do make one other good market point. I do want to bring this to our viewers' attention. You say the top 10 stocks in the S&P 500 account for 30% of the weighting. And that tells me that we need to start to look for other opportunities, whether it is small caps, whether it is different sectors that are not technology.
Yeah, y'all go ahead and leave out.
Well, you're right. And not only 30% of the weighting, but 2/3 of the performance that we've had so far this year. So getting
the market's moving, the economy's recovering because of tech and innovation alone. These bozos are going to keep screaming, oh, there's too much focus on tech. Yeah, hey, they don't need you guys that are retailing tech. Yeah, why don't you go hold some bonds or something like that? Oh, yeah, well, the tech stocks are up 200, 300%, but you can get 5%. You should probably go for 5%. Fudsters, when others are fearful, be greedy. That's all I'm going to put it down with.
Back to the surveys that
Warren
we have with
Buffett did it
advisors,
best.
They're concerned about valuation. They're concerned about market volatility. The S&P 500 is the benchmark for most investors and a lot of financial advisors. But right now, that area of the market seems too expensive. Now we're starting to see not only areas like mid-cap and small cap, but overseas markets are doing pretty well too. And don't feel like you've missed it. If you put some money on the sidelines the last couple of years, there's still a lot of bargains out there.
Yeah, well, and we've got time. Tom Lydon, it's good to see you today. Thank you so much for being here.
Take your tech.
Thanks, Cheryl.
All right.
All right, Cheryl. Sit up there with them bug eyes. Sit down. Kind of make me angry playing around. But nonetheless, guys, let's get straight down into the nitty gritty. We got some sequitur to talk about here. Let's get down to it. First pulling in AMC stock sitting at $4.40. I had a slight move up by 150 basis points, 1.50%. But that's nothing. Like I said, guys, the price action is irrelevant to what's going on in the background. Why, you might ask? Woo! I think this is the all-time high. Have we been this high yet? I don't recall. 28.80%, almost 29%. Somehow days of cover's falling with short interest climbing. Neither here nor there. Fintel hasn't even had the short interest up here for the last 4 days, guys. Y'all know this is my site to go to. It's not been displayed, and now it's displayed up here. Something is brewing in the background. I don't know exactly what it is. Now, let's pull up in here. Shares available, 0. Still sitting at 0%. They're still borrowing at almost 1,000% on the regular. So average has got to be above that. We'll check that out. Just looking down here. Short percentage sitting at 47%, 44%. Guys, these numbers right here are supposed to be calculate the 5 and 10% day runs. They're short, the amount that they were short, if you're going from 71% down to where they had 31% and it kicked up to 7% and 59%. Something is breaking the background. The shares are dry put. I don't think that they can create more shit. Well, excuse me, not let's say that, you know, they can hit the fraudulosa, but this case has got them pinned. I think too many eyes are on this right now, and I don't think they can make this movement while this judge is making a verdict. We don't know when that verdict's gonna come out. I hope that she don't drop it this week either. The more time, the better. You know, I know everybody, hey, we hate, I want to know, but like I said, I have an expectation of what they're going to do. I expect the worst, which is that conversion. But time, this right here, this is okay. Hey, that's fine. Delay that. If you want to delay that, I'm not even asking for her to say no to the conversion. Just delay that thing. Just delay that thing. That's all I need is some delays. Delay that thing out. Delay that thing out a month. Delay that thing out a month. Pulling back through, AMC still sitting on the threshold list as of yesterday. As everybody knows, the reports for the threshold list go the next day, so we'll know tomorrow if it's still on the threshold list today. Clearly, evidently so. We're on the threshold list today. Shortage is still climbing, and there's 0 shares to borrow. So like I said, unless it's some fraudulosa, that wouldn't even make sense to pull up through. So let's see here. I already showed this up here. Now, this is the guy. Just so y'all can see how this is an hour ago. This guy's, I don't know if this is from AMC Biggins or AMC to the Moon. I don't know which person it is, but this was them. As everybody knows, you can lend your shares out for money, right? So now this is what he's been experiencing since the 10th. The 10th, AMC, his portfolio, and we'll read up here, in demand security. You're eligible to enroll for a fully paid lending program. Here is the security you own that is currently in demand for lending, along with this current annualized lending interest rate. In demand securities, interest rates do change. It's also important to note the enrollment in the program does not guarantee that your shares will be borrowed. Interest rate, 77% was what he was going to be getting on that for his shares, interest. Kicked up the next day to 82, that was 711, 82.25. Today is sitting at 95.62%, which is crazy because even if he did lend them out, the people that's borrowing the shares from him, they're making 1,000%. You only get 100% of that 1,000%, which would be crazy to even do in the first place. But this is just insanity to let you know something is brewing in the background. They are actually, I think, bone dry on shares right now. Again, we know they can fraudulosa, but I think they're pinned a little bit right now with this court case, right? But now, pulling it back into some big news. Y'all know one of my big baby bangers has broken an all-time high. I don't know if y'all saw today. Nvdia stock, 441 right now in after hours, had a 4% run up. So we're sitting at now, and this is what I try to tell people where I'm like, investing these long-term, 1%, 2% is nothing. Just what was that? Let me see. Look how these things really don't move at all. Just yesterday where we were having that market took a little dip, right? People are like, oh, it went down to 419, 441. Just like that. Look at the power and velocity in these moves, guys. Look at this. I keep saying dollar cost average. Tesla, Nvidia, Microsoft, XRP, Bitcoin, Ethereum, Amazon, Apple, Path, Rumble. Who else is the big banger that I'm leaving off of there? Y'all know the names that I scream all the time. We've been over this every single day. But nonetheless, you get the point. These big bangers, you need to be dollar cost average. Then, guys, is continuing. You just last month could have got it below 300. Look at this. Look at these moves. Guys, is this not, are y'all not seeing this? Is it just me? Like, you don't have to be an expert chart reader, but guys, are y'all seeing this? Are y'all seeing this? Look at the power. Look at the strength. Look at the strength. Pull this out here. Obviously, this was before the stock split. This was, where did they go with the stock split? It was at 2. This was stock split. Right now, if they reverse split it, Tesla would be somewhere around maybe like 1,200, 1,300. Prior to when it was above 414, but with the stock split, it shows the split price. They stock split last time at like $900 or $1,000, 4 shares for $250 each. So now we're above that stock split price now by what, 272? Oh, Wiener Schnitzel. But like I said, from 5th of the month, guys, if somebody's seeing it, put in the chat if you're seeing what I'm saying. Put in the chat if you've been grabbing in dollar cost averaging some of this tech and tech. Y'all got to be here. It's about the thoughts and the yards. I'm just telling you. Pulling through. Lastly, encouraging everybody should know, RXRX, Nvdia investment proposed recursion pharmaceutical stock, 78.2% Wednesday today. Media reports Nvdia invested a $50 million investment, which is meant to speed up the training of recursive AI model drug discovery. Guys, as you know, I'm about to put a couple of these bucks in here tomorrow. I want everybody to put this on your watch list. Go take a look in here, guys. Hey, I'm telling y'all, they call me Money Montgomery for a reason. Y'all know I'm bringing real facts up here. RXRX. Why did I put that up there? It still put it up. Just so we know it's valid. 78% movement, guys. Damn. We couldn't have known. There was no way for us to have known. So from $6, look at this pop that's occurred. And basically now, this just so everybody knows how this AI is moving. Now, the discovery of drugs, you're going to have AI doing that work. So you might find a cure for cancer. You know, I don't know if they will, just because we know that's a money pit, but a lot of things, sickle cells, all this, that AI, this is what they're doing. They're making this AI is going to be doing the research and the creation of these pharmaceutical drugs. Oh my. Oh my. Is somebody seeing this? Are you hearing me? Are you hearing me? Listen, people. Anywho, much love. You know I love y'all to death. I'm glad that y'all are here on this journey. Salute to take on one step forward. Salute to every person that understands that you just one trade away from life-changing money. You one trade away from changing the course of your life. You're one trade away from changing your family's course of life. You're one trade away from one more thought that you never thought you could acquire. And that doesn't necessarily mean it's that trade of that day, but it's the fact of the accumulation. Guys, understand this stock market is a beautiful thing. It can be as scary as darn thing, it's a fraudulent thing. But I'll tell you one thing. There's money to be made. But now, if you gonna sit on the sidelines and never jump in, hey, I understand. This is the riskman's play, but understand, you got to take risks to get reward. And a lot of this stuff is not as risky as what you think. We're not talking about tomorrow. We're not talking about at the end of the year. We're talking about 5-10 years down the line. 5-10 years down the line. That can be a hell of a change from where you are now to then. And it seems like it's a long time, but I promise you, if you hear it's going to blow by. We're already 7 months in. This channel's almost 5 or 6 months old. Feel like I just started this bad boy. But like I said, guys, much love to y'all. Y'all know, boys know I love y'all. Hey, what a time to be alive. And you already know what's next, don't you? Come on now. The music been jumping at the end, hasn't it? I know. Yes, sir!